Hey, I'm glad to do it, Kevin. It's always a pleasure to work with you. As Kevin said, David Thompson. I'm coming to you from Vero Beach, Florida. For the non-Florida people, that is the east coast of Florida, about 80 miles south of Cape Canaveral. I can look out my bedroom window and see the launches from the Cape, and about 80 miles north of Palm Beach. It's called the Treasure Coast. That's where I am. And my email address is shown right there. Please feel free to contact me anytime about any insurance question, not just flood. I'm pretty good at most insurance. I'm kind of new to the industry. I've only been in this as of today, 36 years, 8 months, and 12 days. So I've been around. It's not my first rodeo. If you got a question, email me. I'm very prompt on email, 24 hours or less, many times 24 minutes or less. And just remind me that you had a class from Florida Insurance School, so I know where you came from. And I'm faking the stuff today, but I've got that down right there. And that's a sample of what I used to smoke. I just moved into a brand new house, newly built in Vero Beach. I closed August the 16th. It's taken me a while to get it looking like a house. October 22nd, I'm having a barbecue feast at my house for a small group of people. Well, small, I just checked, has turned into 47 people. So if you're near Vero Beach, I would invite you, but I'm maxed out on seating space. It's going to be a lot of fun. Now, I am curious, in your chat box, if you'd care to let me know what city and state you're coming to me from. Where are you throughout the U.S., if you'd like to tell me? Got several dozen: Pittsburgh, Clearmount, Florida, Atlantic Beach, Florida, Pennsylvania, the Villages, Florida, Pittsburgh, Harrisburg area again, have some Florida, Port St. Lucie, very close there, Peter, Miami, Greensburg, Pennsylvania, Boca, gosh, we'll be down in Boca in a couple of weeks, Sean, Lake Worth, Orlando. We've got a lot of Florida people here today. And if you live south of Interstate 10 in the great state of Florida, as Kevin called it, you've experienced some flooding information. Now, I'm going to do something a bit different here. I'm sure Kevin's okay with this. You've heard of a quarterback calling an audible, walks up to the line, has his play in hand, doesn't like the way the defense looks, and calls an audible and changes the play. I'm going to call an audible here today and spend a little bit of time talking about the current situation. And as Kevin said, it's not just Florida, but there's some pertinent information that I think is good for anybody around the country. So we'll spend a few minutes on that, a little off script, which means I'll skip some stuff as we go through, but we'll still try to keep this right to an hour because I want to finish as quick as you do, because I'm heading over to the west coast of Florida to help a friend with some hurricane recovery. They were south of Sarasota, about 40 miles north of landfall from the hurricane, and it amazingly fared pretty well. Spent a couple of days cleaning up the yard, so I'm going back over to assist. I made a special trip over to be there when the adjuster showed up. Very educational for me, and I got to credit this adjuster, was very thorough, very well spoken, knew his coverages very well, and was trying to find a way to find coverage. There was one thing he said he'd pay for. It doesn't matter what it was. It wasn't covered. There's no way the policy homeowners covered that. It was just a couple $100. He said, yes, we're going to pay for that. So I was very impressed with him. So I'm boogieing back over there to finish up some help today. Let me show you some current information here about the hurricane. And again, a special shout out to the Florida people. I've been here I've lived in Florida my entire life of 66 years. And we've been down this road before. So welcome to my Florida folks, many of you who took it on the chin. As of the 10th of October, just 2 days ago, the Florida Office of Insurance Regulation reported 449,000 claims. That's in about 2 weeks, folks. That's updated every Friday, I believe. I forgot to go back and check Hurricane Michael, which hit the Panhandle on 10/10 of 18, but I'm pretty sure it's beyond that. I'm not a fortune teller, but based on 450,000 roughly claims in 2 weeks, I'm predicting today, you heard it here first, over 700,000 claims. Now, What's the total losses? It depends on what cat modeling firm you take a look at. I've seen what I think are reputable estimates of total losses in excess of $100 billion. Insured losses, depending again on who you want to believe, 53 to 74 billion with a B. It's not the first rodeo for many of us on any kind of losses, whether it's hurricanes, tornadoes, firestorms out west, ice storms up north. We know that those numbers will increase. I saw a figure today. I had to quickly scan it on my phone, so I couldn't read it entirely. I've got to go back tonight when I get to where I'm going, saying the Hurricane Ian could be the most expensive catastrophe loss in the history of the US. So I got to go back and dig in. There's no doubt about it that it wreaked havoc on this state. Private flood policies, we'll talk about that today, 1,400 or so policies private. I talked to a flood guru friend of mine, Pete Travis with Fountain Group Adjusters. Pete's been at NFIP for 40 plus years. Their preliminary estimates, just a wild guess, pull up from the top of your head, is they're looking at 40,000 NFIP claims. And this is a tragedy. Again, I'm not going to focus on Florida, folks, but this is reality here in this state. And I would bet you a rack of baby back ribs on the 22nd. It's similar where you are. Lee County, Fort Myers area, really good friend of mine, insurance agent there, will be at my house on the 22nd. I said, John, I doubt you're going to come, because he said, I will be there to eat the barbecue. And a really good lifelong friend of mine named Steve just called me a half an hour ago. They both live in Lee County, Fort Myers area. In that county, this is hard data from FEMA, if you believe FEMA, less than 1/3 of the residential of all structures in Lee County had any flood insurance at all. Now, 51.4% in an A or a V zone, that's called a special flood hazard area, SFHA. That's the next slide. Only half the people in an A or a V zone had flood insurance. Now, remember, when your customer says, I'm not in a flood zone, everybody's in a flood zone, okay? It's just what zone you're in. B, C, and X zones are low to moderate risk, and A and V zones are high risk. So these A and V zones are high risk flood zones. If you live in an A or a V zone and you've got a mortgage, you will have flood insurance, period. There is no choice. So look at this. This tells us that half of the people in an A and a V zone had no flood insurance. Why? Because they didn't have a mortgage. If they had the mortgage, they have to have it. They paid cash for their house. And I can tell you, folks, I've been around a long time. The emails I was getting, I still do some contract work for the Florida Association of Insurance Agents where I used to work. I worked there 25 years. I know what's going to happen when the hurricanes come through, the type of emails. It's going to be flood insurance. And unfortunately, you're going to see time and time again where a customer said, I thought my homeowner's policy or my property policy covered this, and I didn't have any flood insurance. Well, people also say, well, I'm going to self-insure. Self-insure and no insurance are different things. For example, we'll get to this when I talk about risk rating 2.0. I just got a flood quote on my house. My house is in a flood zone X, but I back up to a small lake where it's flood zone AE. Prior to risk rating 2.0, my premium would have been $525. The RR 2.0 premium, I got a quote today, I was in the military, USAA, $788. So some people say, nah, I'm going to self-insure. Well, see, the difference is I understand what I have done. I understand in my house flood, that's the David Thompson money. I'm willing to accept that risk. I know my homeowner's policy does not cover this. Consumers are like that. And sadly, whether we're in Florida from hurricanes, floods in West Virginia, flooding in Oregon, bad flooding last year, Death Valley, California, folks, I've been there 9 times. They get 2 inches of rain per year. I've stayed at, the Oasis, I forget the inn, the Desert Inn. I've stayed in that hotel. They got 1.1 inches of rain about 3 months ago. The whole place flooded. 500 people were stranded. You might have seen the pictures, cars up to the windows in mud in Death Valley, California. You're not immune from flooding. And sadly, you're going to see situations, people not covered. Now, I spoke with a really good agent in St. Augustine, Florida, just south of Jacksonville, North Florida, yesterday. He's been around 30 plus years like I have. I was in their agency after Hurricane Matthew came through in 2016, and I was there within 2 days of the hurricane. They were taking claims from people. And then, like yesterday, my friend Dan told me, Dave, I forget his exact number, 30-something, 30-some, we'll call it 35 people contacting us with water knee-deep in their house and no flood insurance. And he said, and I know them very well. I've taught in their agency, to a person, Dave, we had a flood quote, an actual flood quote, a hard copy, and a signed rejection. Now, this is not an E&O class, but I teach E&O. I work with about a dozen attorneys, plaintiff and defense, and I can tell you with the firm quote and a rejection form, that claim has a near 0% chance of going anywhere. Don't just have a waiver for rejection of coverage, any type of coverage, whether they don't want uninsured motorist or automobile policy, don't want flood, don't want wind, don't want ordinance or law. Have a hard quote in your file, because the plaintiff attorney will hire an expert witness like me who will have that quote. So the agencies I've spoken to, my friend John coming to my house on the 22nd, there is no doubt in my mind, John has dotted and crossed everything. Every customer has a quote. Every customer signed a rejection waiver. I feel bad for these people. It's horrible. They're going to get about $30,000 max in FEMA aid. So this, again, this could be anywhere in the country. Flooding is the most costly natural disaster, bar none, more than hurricanes, more than fires, more than tornadoes, the most costly natural disaster. So right now, we're living the bad dream in this state. And unfortunately, this could be Pennsylvania. This could be anywhere that you are. This could be timely for you. Luckily, Vero Beach got along great, winds to about 60. I did have my sister put up shutters. I was out of state on vacation. We got lucky here. It could have been the other way. I could have been sitting here with a destroyed house. So pardon the bit of a sermon. I'm a firm believer in providing quotes to customers. If you don't quote it, your batting average is 0. There's a lot of great resources. I've got a great article that I wrote called Why Buy Flood Insurance. I'll be glad to send that to you in a PDF. Email me, I'll get it to you. Probably going to be tomorrow because I'm driving tonight about 3.5 hours. All right, I mentioned the A and V zones. The preferred risk policy will get there, but it's gone. It's pretty much gone. I'll tell you why. BFE, base flood elevation. BFE drove the flood premium. BFE is how high the water is expected to rise in a flood. If you're plus 2 feet above BFE, your rate's a lot less than 1 foot below BFE. BFE doesn't matter anymore under 2.0. But RC BAP is a master condo policy. And I can tell you folks, when Hurricane Ian came through, there are a boatload of condos over there under the RC BAP. The dwelling form covers houses. The general property form covers offices, hotels, and situations like that, okay? Just one statistic to show you. Approaching 1/3 of NFIP policies do not have any contents coverage. Why? My speculation, which I think is pretty accurate, is a lot of people buy flood insurance because they have to, because the lender makes them. The lender does not make you buy flood insurance. A friend of mine's a defense attorney, defense up in Tallahassee. He spent 2 years defending an insurance agency over no contents coverage. Quote the contents. Even if you're quoting a tenant-occupied rental dwelling, throw in some contents, 10, 20,000 to cover appliances. Always quote the contents. The PRP's gone. I bought I had my company quote me $250 building and 40 on contents. Always quote some contents. Don't quote it. You sure can't sell it. Okay. Here's a rejection form. A corporation has one. Notice the thing about excess building and excess contents. About 3 years ago, I got data from FEMA, hard data, that countrywide, about 33% of NFIP policies are maxed out at maximum limits. Now, those maxed out policies are higher in coastal communities like Florida, of course. So if you're quoting, like my house is insured for $300,000 of coverage A on a homeowner's policy. If you're going to write me a flood policy at $250, you need to be quoting excess flood. In a perfect world, you have the hard quote. If you don't want to do that, need to have an email recommending flood coverage with a ballpark figure of several $100s. They don't want to buy it. In my book, if you don't want to buy flood insurance, you're going to sign a piece of paper. I will not take an email from you saying no. I want a piece of paper signed by you. An email is really good. Icing on the cake is a sign-off rejection form. I do not want it. An attorney friend of mine in Louisiana does defense his entire career. He said juries love to see signatures and they tend to hold people accountable. Now, don't do this because you're afraid of being sued about E&O. Do it because it's the right thing to do. Tell the customer you need flood insurance and here's why. Like in my case, let me just do this real quick on my phone because I can't do math without my phone, okay? My quote was $788. Here's how you present this to the client. 788 divided by 365 days in the year is $2.15. You can't walk into McDonald's and spend $2.15. It's a great sales tool to use. It's not $788 per year, Dave. It's $2.15 per day. Crud. You can't see it because of the blurred background. Well, maybe that's my Peloton right there, my Peloton bicycle. I pay $45 a month, $1.25 a day to torture myself. Flood insurance is $215. All right, risk rating 2.0. NFIP started in 1968, had been no significant rating changes until last year. They call it equity in action. Here's what that means. Some people hadn't been paying enough. Now they're going to pay more, but not a lot. A lot of people are going to pay less. 20% will pay less under 2.0. About 60% will pay less than $100 a year more, and about 20% will be penalized and have to pay more, okay? So the next slide is from a write your own vendor. Without reading the slide to you, what it says is, and you're living this dream right now, as your policies renewed under 2.0 and 401, in almost all cases, or at least the majority of the cases, the agency had to do something. They had to verify data. It might be how many stories. It might be frame versus block. It might be the replacement cost on a commercial property, on a commercial policy. But I hear time and again, agents telling me that every single NFIP renewal has to be touched. Now, that might be a tad different for you, okay? But you're going to have to be involved on those, okay? All right. So here's what we used to use to rate flood insurance, a map zone, A, B, C, X, V. That mattered. The base flood elevation, BFE. The foundation type was a slab on grade or elevated. The elevation, plus or minus. As you know, if you do flood insurance, if you compare +1 above BFE to -1, it is dramatic. And then you had the fire surcharge fee of $25 or $250. That's pretty much what mattered. 4 or 5 simple things is what mattered. Well, not anymore. Look at this, distance to flooding source. Now, I can tell you my speculation why my policy is $788 per year. If I were, I'm not going to buy it. Don't worry, I made myself sign a waiver, okay? Okay, Thompson signed this waiver. There's a lake behind me. There's 3 small lakes in my community. My piece of property, from my back porch, I could underhand toss a softball and be in the lake. So I think that's why I'm paying $788 as opposed to $525 for Zone X. Now, the folks in Fort Myers, Naples, on the west coast of California, up in the northeastern part where Sandy hit, rivers, lakes, the closer to flood source, the more you'll pay. Whether it's single family, 2 to 4 family, all that matters now. Is it frame or masonry? I've been told they default to frame. My house is masonry. It's not a huge premium difference, but $1 is $1. There's new foundation types, and the cost to rebuild is now required pretty often on the general property form, as well as on that RC BAP thing. Other stuff, the elevation, the first floor height. Now, here's a key thing: an elevation certificate can help you. For my flood insurance gurus, flood zone BC and X from 1968 until last year, BC and X could not even use an elevation certificate, EC for short. This is a bizarre concept, okay, folks? I could go out and get an elevation certificate for a couple $100 where I live. If it came in, 1 foot below BFE, it doesn't hurt me. It might help me. And I'll bet you a rack of ribs on my 22nd party coming up here. I'll bet you if I got an EC, I'll bet you $788 would drop. But I'm not going to do it because I'm not going to buy it anyway. Now, I think Kevin Emrine is probably not going to pay me for today's class, because I'm sure you have a 36-year insurance nerd saying, I'm not going to buy flood insurance. So I will take that chastisement from Kevin off the air. But an EC can always help. Tell a customer, if I'm your customer, you should tell me, Dave, I can't make any guarantees, but you might want to spend a couple $100 and get an EC. The number of floors matters. Prior claims matters. My dad passed away in February. My dad had a saying, and to speak like my dad, he would say, that's a goat roping. Well, it means it's all messed up. And there's an elaborate process about when claims count and when claims don't count. I've got not got time to go into that. And then you got that to fee again, 25 or 250. So if we think about 2.0, look at the yellow. That stuff is not a rating factor anymore. The fact that my house sits in Zone X means nothing. The fact that BFE, where I live, I looked at the map this morning, BFE is 22 feet. That doesn't matter anymore. It doesn't matter if I'm +1 or +2 above or below BFE. But again, that EC can help. All right, private flood. You saw there's about 1,500 claims in Florida. Depending on who you want to believe, private flood makes up around 10 to 15% of flood insurance around the country. Now, another prediction. Okay, you heard this here first also. My prediction, at least where I live, is that private flood markets will start to dry up. Some companies will cut and run. My mom and dad's house, it's about 5 miles from where I live in Vero Beach here, has a private flood policy because the cost is more advantageous. So private flood's an option. There's upsides, there's downsides. I'll talk to you about those. Private flood can be a huge cost saving sometimes. I got a buddy of mine ran a quote for me for private flood for my house, $950, more than NFIP. So Brian has a great question. If NFIP can't make money on flood, why do private flood think that they can? Well, Brian, this kind of goes back to 2012 and that Biggert Waters thing, the Biggert Waters Flood Insurance Reform Act of 2012, sometimes called BW12. Now, you got to go back in time about a decade. And insurance companies were flooded with money. They had boxes of money. Their surplus was through the roof, and they're making 0.02% in a money market. Well, Biggert Waters rolled out, and you saw some policies that renewal would go from 3,000. I've seen these folks, this is real, from 3,000 to 15,000 in FIP. Well, private companies will say, you know what? We can put a dog in the, that's a Southern expression. I'm going to put my dog in that race. We're going to put a dog in the race. We're going to start making money on private flood because anything's better than 0.02% money market. And at least where I live, they've done pretty darn good. They've made money. But again, 36 years, 8 months, and 12 days ain't my first rodeo. I predicted when they rolled out in 2012, I said, you just wait. In 2012, I said, you just wait. Something will happen and the gravy train will stop and they will cut and run and bail, especially surplus lines. They can dump you midterm where I live. I don't think there's an insurance nerd like me. And by the way, that's a compliment, by the way. Kevin Amron's insurance nerd is a compliment. I don't think there's an insurance nerd out there that would bet you a Boston butt or a pork shoulder that private flood insurance will start to increase in premium. I predict it will start to dry up, not just in Florida, but throughout the country. Great question, Brian. I appreciate that. I hope that answers your question for you, okay? Now, a private, just don't read the slide. I don't read slides to you. You know that, but some of you had me for classes before. I don't read slides to you. A private policy has to meet the 6 FEMA criteria for a lender to take it. And that's what they are right there. There's some exceptions to that. But look at number 4 in yellow. A private policy has to be at least as broad as NFIP. If it's not, the lender will not accept that. Hold that thought, okay? We're going to come back to this in just a second here. I'm not going to read these to you. Here are some advantages. Let me just pick a few of these. Higher limits. You can go above. I got a quote for $300,000 on private policy on my house. I can't get that under NFIP. $250 max. Some companies in Florida, they attach flood to the homeowner's policy. Look at the $2 million. The next biggest one to me is replacement cost, especially on contents. In general, there's exceptions to that. In general, NFIP is ACV. Of course, there's exceptions. Contents are always ACV. A rental dwelling, always ACV. Commercial structure, always ACV. Private flood's going to give you replacement cost many times. Skip a couple. Loss of use under the homeowner's policy, big, big. Commercial side, business income, big. A lot of businesses in Southwest Florida will be out for a year. Orders are law. No 30-day wait sometimes. Lower premium. EC is not required. These are some of the upsides. And here are the downsides. Not a complete list. The lenders. I don't have anything red in front of me. Maybe that's, yeah, that's red. That's the eyeglass holder. Red alert, red alert, red alert. If you've got a lender and you're going to write a private flood policy, it better meet the criteria. I'll show you how to do that in just a second. Okay, so lenders are a big roadblock. They're non-standard policies. NFIP policy has in effect not changed since 1968. If you've got 7 private flood policies, you've got 7 different policies to read. They can and often are canceled or non-renewed. NFIP cannot cancel, cannot non-renew. You could lose a subsidized rate or grandfathering. More on that if we get there. Those are gone too, by the way, and rate increases. I was teaching a class in the center part of Florida, near the Lakeland, Florida area for my Florida people. That's about as inland as you can get. And they had a private flood policy on a house around $400 and some change. Surplus lines. Renewal came in $2,500. That can't happen in NFIP. They're maxed out at an 18% increase under current law. Okay. Now, lenders get all jiggly about this because there are regulators like the FDIC and OCC and people like that. They audit, we'll just pick Wells Fargo. If they have non-compliant private flood policies, they get popped $2,000 per loan violation. And so what they're doing still today is some lenders are sending you, the insurance agent, a form like this to complete. Don't try to read that. It says right there, your signature. You certify the private policy meets those FEMA 6 criteria right there. I am not signing that form. I send them the entire policy and say, you read it. Now, it has gotten better with private flood. Trust me, it's gotten a lot better. Some lenders are getting on board and are pretty darn sharp about this. Now, I'm going to show the code in a second. A 42 US code right there. It addresses private flood insurance. So there is the code. Don't try to read the whole slide. Let me paraphrase the yellow for you at the bottom. What it says is, if the policy meets the criteria established in the FEMA 6, the lender has to accept it. Now, again, red alert, red alert, red alert, okay? Many private flood policies say in plain talk, I'm going to paraphrase here, this policy meets the FEMA requirement. It complies with 42 US Code 4012B1B. If the policy says that, lenders are pretty hip today on taking that. If it does not say this, let me give you a hint. If you've got a lender, it's not going to work. To speak Southern to you, that policy ain't going to be accepted. The lender will not take it. So if you're going to try to supply a private flood policy to a lender, you need to have the policy in your hand sent to the lender. I have seen lenders' emails to agents saying, if you intend to provide flood insurance through a private market, please send us the policy. If it says 42 US Code 4012B1B, most likely it's going to be accepted. Doesn't say that, it's not going to work. So don't, if you're paying cash for a house, no mortgage, it's a separate issue. I'm not picking on lenders. They're held to task. I understand. I get it. If you had there's Truist. Now, if Truist had 13,000 non-compliant policies, go back 13,000 times 2,000, that's a lot of money. So make sure it talks about 42 US Code. Grandfathering is gone. It's dead. Your grandfather's passed away. What grandfathering was, if you had a structure in an X zone, zone X low risk, and they got rezoned to zone VE, which is a really high premium, if you kept continuous NFIP coverage, you got to use zone X because you were a grandfather to zone X. That's gone now. I'll talk to you about that in a second, what happens. Okay, went the wrong way. The preferred risk policy, that package thing, that's gone too. If you got PRPs, that's the lingo, they will not be a PRP at renewal. You cannot write a PRP today anymore. So what about this grandfathering thing? I had an agent up in the Cocoa Beach area near Cape Canaveral that did a lot of condo stuff. His name was Barry, super nice guy. We became good friends because his wife had health issues. My sister had health issues. She passed away. Barry and I became very good friends. He had a condominium, zone A. Okay. The premium was about 25,000, give or take a few. It got rezoned to VE. The premium, I'm not making this up, was over $110,000. They were grandfathered to A. Well, now that's gone. So what happens is, if Barry had that condo at 25 grand, it goes up on what's called now the glide path. You can see him up down the glide path. What that means is, under current law, this could change if the president signs the bill. Under current law, they're going to go up 18% per year until they reach the full rate as determined by an elevation certificate. And I can tell you that condo paying 25 and should get to 110, it will go up 18% forever. They will never reach the full rate. Just trust me, they won't. As to why, it's not, I could email me, I'll tell you why. This condo will go up 18% per year. If you had a house in an A zone, and they're paying $8,000 a year, the zone changes to VE, and it's 32,000, they will never hit the full rate. They will go up 18% forever under current law. That's the max it can go up right now, 18%. The same happens on the PRP. If your PRP disappears, like in my case, 525 would have been 788. It doesn't go up to 788 next year. 525 plus 18%, which is about $100 a year, is going to go up that much until I hit the full rate as determined by an elevation certificate. If I never get an EC, if that condo doesn't get an EC, it'll go up 18% forever under current law. That's how we tell our customer, get an EC. There's no harm other than spending a couple $100. Don't get an EC. Bad stuff can happen to you. All right, done all that already. What will not change? The zone still does matter for lenders. I'm in a flood zone X. I don't have a mortgage. My lifelong goal was to pay cash for a house, which I did. I don't have a mortgage, okay? If I had a mortgage, SunTrust, Truist, Wells Fargo cares what zone I'm in, because I'm in an A zone, I have to buy flood insurance. You can still get these letter of map amendments, ALOMAs. The statutory cap is currently 18%, but it's not always 18%, and here's why. My homeowner, my policy here, if I bought a flood policy, it would include the $25 FISCE surcharge fee. So that's where the $788 comes from. $788, okay, of that, $25 is FISCE. If I now change this into a rental dwelling, I now pay $250 FISCE, $225 more, which takes me above $1,000, which is more than 18%. So it's not always 18%, but in general, that's the max. Now, a policy assignment. I'm going to pick on Brian because he's the last guy on my screen. And Brian, if I pick on you, it means I like you. If I sell, I'm going to use layman's terms here, okay? If I sell my house to Brian, I cannot give him my homeowner's policy. I cannot assign my policy to him unless my insurance company says that's okay, and they will not do that. I can give or assign my policy NFIP to Brian. I don't have time to tell you why. Email me. I'll be glad to help you tomorrow, not today. It is more important than ever to try to assign a policy to a customer. If you cannot do that, perhaps like USAA will not let me assign my policy to Brian unless he is a USAA member. So if he's not a USAA member, I cannot assign my policy to him. But when he goes to Kevin Amron's insurance agency to buy a policy through Right Flood Insurance, if Brian lists my old policy, USAA, policy number 12345, and effective dates, he gets a much better rate many times. Try to assign. If you cannot, you need to have the prior policy information. And you cannot make up a policy. It doesn't work. It's got to be real. So try to assign, if it's not an option, and show the prior information. Never, ever, ever let an NFIP policy lapse because the customer doesn't pay the renewal. Or get this, folks, get this. This really stinks. If Wells Fargo doesn't pay my flood insurance premium, I have a lapse after 30 days. If I have a lapse, my glide path, if I'm on one, is gone. You can see right there, my glider crashed and burned. Never, ever let it lapse. And now remember this too. If I am in the NFIP and I leave to go to Neptune Flood Insurance, a private company, for a year, and I want to come back to NFIP, I have a lapse. If I was on a glide path, I'm done. This is David Thompson talking. I'm not speaking for Florida Insurance School at all. This is my personal opinion. If I had a customer on an NFIP glide path under the current law, I would not move them to private because I can always go back to NFIP, but not always at the same rate. Now, there's some exceptions to that. I'll be glad to swap emails with you about that. On a glide path, I'm not moving you to private. I know an insurance agency on Sanibel Island, they got hammered bad, by the way. They will not do it. If you're on a glide path, They will not write you a private policy, even though they have markets, they will not do it. Very, very critical. Don't ever let that policy lapse. And if you leave for private, recognize when you come back, you might not be on a glider. All right. I've already done all this. Need not rehash that again, okay? So a quick question here. I always ask this question. I'm gonna get my chat box fired up in my glasses so I can see what your answers are gonna be. Here's my quiz. Find your chat box if you want to weigh in and be part of the class today. I've got a Zone X policy, my house. I'm getting the loan. Okay, I'm getting the loan. Can't pay cash. The lender says, we don't care. Not going to require insurance at all. And I say, I want to buy it anyway. Do I have a weight? What do you think? What saith you? Yes or no, or maybe I don't know. I have no's, I have yes. Okay, I have another no. I have a couple more no's, I have a couple yeses. And the answer is no. Because the zone doesn't matter. And whether the lender is required or not doesn't matter. What matters is I'm buying the policy in connection with a loan. Now, if I wait 2 days to buy it, it's a 30-day wait. This has come up so often. I wrote an article about it. If you're buying the policy, when you're getting a new loan, a refi, a home equity, a line of credit, you're getting that loan today on 10/12, you buy the policy today, there is no wait. If you go home and tell your spouse, well, I'm not going to buy the policy, and your spouse says you're an idiot. If you have a spouse, you're an idiot. We should buy it. You call me back tomorrow, your insurance agent, there's a 30-day wait. So please don't let somebody tell you that the answer here is there is a wait. I've been wrong about some stuff in my life. I'm not wrong about this. I've got it from FEMA. 30 days, I told you, I think I told you, when Ian hit Florida was on a Wednesday, Thursday timeframe. I left the Friday before to go to the Grand Canyon, and I did some wicked hiking, 75 miles in 6 days. Everything was great in Florida, and then it went in the toilet really fast. So I know that stuff changes. I mean, in 5 days, we went from a blob down in the Caribbean to a cat force. Someone tore this state up. So don't let somebody tell you there is a way. If there's no loan in play, do you have to wait, Brian? Yes, you do. In fact, a quote I got from USAA, I got it today. It said right there, because they asked me, when did I buy the house? I told them, did I have a mortgage? I said no. So the lady on the phone told me verbally, okay, there will be a wait. And the quote that I got in my email today said there will be a 30-day wait, because I could go down to Truist today and get a home equity loan and buy it today and have no wait. I got to tell you, if I were living in Fort Myers and I saw what was coming my way on Monday, you can decide if this is ethical or not. It's legal. I would have gone to Truist, got myself a line of credit on Monday, bought myself a flood policy. I have seen that happen. I don't know. Kevin teaches that law and ethics course. Is that ethical? I don't know. Would I do it? Yeah, I'd do it. And Kevin can write me up on that too. I have seen that happen. Would I tell a customer to do that as an insurance agent at the risk of being jacked up again? I believe the answer is yes, I would. Hey, the law is the law. I'm following the law. I don't believe, my view, that's unethical. There's a way around it. I would do it, okay? All right, other structures. Now notice this, if you're thinking homeowners, you're thinking 10% of coverage A for something like a detached guest house, and that's coverage A plus 10% more. Well, NFIP doesn't work that way. All you can cover is a detached garage you get 10%, but it reduces your, in my case, my 250. If I had a guest house in my backyard, had NFIP at 250, that's 250 total for the house and the guest house. So look at the green. We don't cover structure used for dwelling or business purposes. So 2 pictures here. House on the left, we'll call it, 150. We'll call the garage 20. I'm just making up numbers here. If you have 150 on NFIP on the house, you can use 15,000 over here on the other structure, the garage, all right? Now, if you have a loan through Wells Fargo, Truist, people like that, I have seen it to where they require a flood policy on that structure right there. So it's not 150 plus 15 more, it's 150 total. Now look at this next house. Clearly maxed out at 250. So how much do you have on that garage on the right? Now hang on a second, I'm going to go back, okay? Read that slide again. Just read it to yourself. I'll shut up for a second. Read that slide. Especially the green. That's the hint. Look at the green. Look at that house. How much you got on the garage? Who wants to weigh in? Brian, you've been bold so far. What saith you? Brian's in for 0. Want to tell me why, Brian? Who else wants to weigh in here? Why, Brian? Look at the garage. What's in the back? The chimney. Is that to keep your cars warm? No. If you look at that very back, it appears to be a concrete slab with a separate doorstep there, it looks like to me. And perhaps that's a man cave back there. That's not covered. That's a separate policy. You can buy up to 500,000 on that. Now, let me show you a real E&O claim. In fact, unfortunately, I know this agency pretty well. Now, we go back a few years, we had a house in Zone X, had that old PRP on it. And this pool house right here was in an AE flood zone, high risk. The agent gave a verbal quote of about $5,000. The attorney customer said, no way. There's a flood at this pool house. He called to submit a flood loss. There's no coverage because it's used for residential purposes. Well, the agency said, yeah, we called and told him about it. There was no firm quote. There was no signed off rejection. There was no email. And that claim settled out. Agency had to pay their deductible. Now, what's the takeaway here? Separate policy per structure, provide a firm quote, and have a rejection form. Now, if you're saying, I don't want to spend all my time quoting, at a very minimum, you suggest to the customer in an email, I recommend you buy flood insurance on that guest house. Based on your elevation, I'd speculate between $2,000 and $5,000. I'd be glad to get you a firm quote. We recommend you buy this coverage. Please tell me what you want to do. They write back and say, I don't want it. That's good. My defense attorneys will take that. That's good. Icing on the cake, have them sign that waiver. You've got either a flood quote or a ballpark figure. You've broken it down to $2, $3, $4, $5 per day. You got a signed off rejection or waiver. I work with 4 or 5 plaintiff attorneys. They're not taking that case. The customer cooked their own goose. All right. Talked about the surcharges. Here's where the E&O claims come from. I don't care if you're in Death Valley, Oregon, California, Pennsylvania, Florida, Mississippi. There's no flood insurance coverage and there's no documentation was ever discussed. 51% of the people in Lee County in an ARV zone have no flood insurance. I can assure you that not every customer has a quote and a signed a rejection. If you don't have that, it's not looking good. I mentioned no contents, no excess flood, I mentioned other structures. And then look on, I'll skip that client check on the dash. That's a specific situation. I talked to my flood guy today, Pete, and he said, we're already expecting to see E&O claims on the commercial structures like a restaurant that flooded because NFIP does not provide business income, and private flood can sometimes. I expect to see those claims coming in, especially where two neighbors are both flooded and one has private and one has NFIP. Like I said, 36 years, I know what to expect. Let me give you my top 10 list of NFIP, then we'll call it a wrap here. I'm not picking on NFIP. This is not a bells and whistles policy. A 30-day wait, for me, that's a long time. The PRP issue, that's going to go away. So that's not really a problem anymore. You know, separate deductibles, $1,250 to building, $1,250 to contents. My good insurance agent friend, John, he's got major damage. His pool is a mud bath right now, full of mud. He's got $1,250 building, $1,250 contents, which is $2,500. Too many policies don't have contents. That's easy to fix, quote contents. I didn't even talk about property not covered. My good friend Steve from Fort Myers called me at about 1:30 my time, said, hey, my boat dock got washed away in the hurricane. Well, Steve, you ain't got no coverage, dude. I've known Steve for 50 years. Your homeowners doesn't cover that because it's flooding. And under property not covered, NFIP says we do not cover docks or swimming pools. And he said, well, that's an $80,000 dock. I said, Steve, that comes from the Steve Worth insurance policy. He said, yeah, I figured that out. Okay, docks are not covered. No ordinance or law. Most times, NFIP's ACV. Now, private can fix both of those, number 5 and number 4, and number 3 and number 2. Many private policies will, not all, many will cover those. And then the last thing again, I can tell you from talking to my attorney, Ben, up in Tallahassee, who's done E&O defense for 30 years. Ben says, David, I can tell you that when Hurricane Michael came through, he said, I can tell you from Hurricane Michael that my E&O claims about flood insurance will be lessened. Now, I don't know about Fort Myers area, but Ben and my attorney friend Blake in Miami has said the same thing. He said, David, agents are getting it. They're listening in class. They're doing it better. They're doing it the right way, time and time again, more and more than they used to. They're providing a quote. They're explaining the benefit of it, and they're getting a rejection form. So I hope that pans out. Now, if you're in an area where you write flood insurance, and most of you are, for about the 5th time, and then I'll conclude today to stop beating this horse, is quote flood insurance. You know, Wayne Gretzky, that hockey player, said, he was famous for saying, you miss 100% of the shots you don't take. If you don't quote flood, your batting average is 0. You're not going to bat 100. Quote flood, explain the benefit, the cost, and $1 per day, and sign a waiver. So there is my email address. It's real simple. My name is David Thompson. It's davidthompsoninsurance@gmail.com. I really do, after 36 years, like your emails. I've been flooded with them the past week. Please email me anything. If I don't know, I know people that can help. I enjoy hearing from you. Don't make yourself a stranger. If you need tips on barbecue, email me that too. So